This is how Tuesday looks like in the world of business and markets from Nigeria. Let's get the show started. I am boasting of Nigeria standing its ground with the ECOWAS community on land border closure against smuggling, repackaged imported goods, drugs, and munitions imports. The Nigerian authorities says ECOWAS citizens entering Nigeria must hold regional passports, a valid one for proper identification, and says Nigeria's borders would not be used for folks coming in without identifying just what they want to do within the country. That's according to the country's Foreign Affairs Minister, Geoffrey Onyema. He says that the tripartite meeting, which has been planned within the next 2 weeks, will have Nigeria, Benin Republic, and Niger Republic sitting together at the country's political capital, Abuja, to discuss the way forward. Nigeria says the issue of 31st January is not a terminal date for the reopening of the land border closure. If all these things, what the conditions Nigeria is putting together, and there's an agreement, Geoffrey Onyema says we could even relax those things before the 31st of January, putting paid to speculations whether Nigeria will reopen its land borders on the 31st of January 2020. Nigeria says if all conditions are met by countries bordering the largest economy in West Africa. That's where we are as far as the border closure is concerned. Nigeria, standing its ground and looking ECOWAS straight in the face, says all things have to work out before the land borders are reopening. In the meantime, the country's debt servicing numbers for the first 9 months of this year came in yesterday through the central bank. $1.09 billion was the amount we spent in servicing debts between January and September. That's slightly lower than $1.28 billion we spent in the same period on debt servicing last year. That's according to a new economic report released late Monday by the central bank. And the fight against anti-corruption continues. The Independent Corrupt Practices and Other Related Offences Commission, called the ICPC, says the 2.4 billion naira in cash or in bank accounts and property illegally acquired and linked to a former managing director of PPMC. PPMC is the Products and Pipeline Marketing Company. It's a subsidiary of the NNPC. A former managing director of the PPMC, Haruna Momo, is standing trial, and the ICPC says the 2.4 billion naira and other landed property which allegedly illegally acquired will be forfeited to the government because the agency has secured an interim order of forfeiture from a federal high court in Abuja. The former PPMC managing director is accused of using cronies and shell companies to siphon funds, harm dozens of billions of naira, and carrying out several unlawful activities while he was in office. The ICPC says the 2.417 billion naira, which consists of local naira and foreign exchange monies, are stashed in multiple bank accounts, 4 banks to be particular. He is also alleged to have 5 landed properties in different parts of the federal capital, Abuja. So the ICPC says all those billions of naira and landed property will be forfeited to the Federation account. In the world of business, Dangote Sugar Refinery, listed on the Nigerian Stock Exchange, announcing plans to merge with unlisted Savannah Sugar Company Limited. This will be via what they call the scheme of external restructuring, a transfer of assets and liabilities. Dangote Sugar Refinery PLC, according to the announcement, will emerge as the surviving entity, subject to all regulatory approvals and court-ordered meetings of both companies. So let's go straight from there to the stock market. The Nigerian Stock Exchange market finished positive on Monday. It was on the back of the rally that we saw around the world on Monday. Fears around the trade talks dissipates and investors pumped money into risky assets yesterday. So U.S. treasuries were down, stocks were green across the board, and Nigeria shared in that market optimism. Temple Ashajo is here on the show from the stock exchange to bring us up to speed on these and other stories around the marketplace on Monday. I also took particular note, Temple, of the declining yield on treasury bills because the central bank has locked out individuals and local corporates from participating in open market operations. This is news. Bring us up to speed, Temple. It's good to have you.
And that's why we've seen a lot of the traders now, cherry picking across the bonds markets, across the treasury bills markets in recent time. But traditionally, we start with the equities market. So let's kick off with that. Where yesterday we saw an addition of 52 billion naira to the equity capitalization of the exchange. That was the gain that we saw on the part of investors that traded smart yesterday, indicating a rise of some 0.41% eventually for the key benchmark indices. If we look at the activity level, things were a little bit mixed. We saw increase in volume. Volume of transaction was up by some 45%, but we saw the value of the entire transaction that dipped by some 26.08%. And of the entire transactions or turnover that we had in the markets yesterday, we got Zenith Bank, Axis Bank, and UBA accounting for almost 65% of the entire transactions that we saw in the markets yesterday, even though we know that the market breadth yesterday was also really very positive at 18, with 18 gainers as against some 13 losers in the market. But basically, we saw the all-share index trading above its opening point all through the session yesterday. Bargain hunting was basically what was responsible for these gains that we saw yesterday, because we saw all the 4 tier 1 banks listed in the market experiencing some bargain hunting yesterday. The prices all went up. I talk about UBA, Stanbic IBTC, Axis Bank, Guarantee Trust Bank. FBN Holdings, for example, was a particular company that actually touched 5 naira 70 kobo yesterday before it declined back to 5 naira 30 kobo as a result of some quick profit taken there. Yesterday we got a couple of stocks on the beats card. We had Champion Breweries, which in recent time has been making waves in the market. It was up yesterday, dropping. It had dropped actually the last week to its 5 years lows. But yesterday we saw a reversal in all of those losses, and the year-to-date loss has now reduced from 54.7% to 50.25%. Unilever, on the other hand, was actually on the offer cards due to the poor earnings that came in for that company. Energy stocks yesterday, we saw only MRS making a bit of shifts. It was down by some 9.7% yesterday. And so if we go by the sectoral performances, we got the banking segment as the only stocks, as well as the industrial goods segment of the market that experienced gains yesterday. Consumer goods was down. Insurance was also down. Oil and gas was down by 12 basis points. For the NASD OTC market, that was unchanged. We saw just one deal yesterday, and it was on WAMCO, which didn't even make any difference. Eventually, just 1,000 units of its shares were actually traded yesterday, but that didn't change the price. For the fixed income side of the market, we've seen things, a bit of correction actually on the bond side. Yesterday we saw the market actually opening sluggish on the bond side, the secondary side of the markets. We saw low volumes flowing through the market session. The 2026, the 2049 bond maturities were the most traded, as reflected here on the screen. We got 5 deals against the 2049 security, and of course the January 2026 has just 6 deals. Average yields for the side of the market was actually a decline of 5 basis points. And for the treasury bill side of the market, we saw a lot of investors cherry picking on that side of the market. Treasury bills market also opened weak, but we saw market players still trying to grapple with this directive from the CBN, sending some individuals and corporates off the OMO side of the markets, both.
Yes, Temple, that's where the big story is for the debt market. Treasury bills yield, looking at 9.95%. That's a very big one there because the central bank is telling local investors, go to the stock market, go to the bond market, go to BAs and CPs, do the savings bond, which is currently on Market Street. Don't play the open market operations. And it looks like perhaps that is beginning to shift investors into equities. So yesterday, 60 billion naira may just be a signaling that this redirection via the central bank, because the government is under the yoke of treasury bills borrowings and the costs associated with that. I think this is something positive for the market. I think everyone is digesting that as we speak. Thank you, Temple. We'll get back to you later on the program. The big story we want you to focus on is this Dangote sugar. And Dangote flour is going on sale to Olam, but the Dangote sugar is doing a combination with unlisted Savannah Sugar Company Limited. How's the market taking all of that? Temple will try to drill down for us a bit before the end of the show. But let's take that to the commodities space. You've seen some of the big stories, but I'm going to allow Bolanle Agbaje, who is a member of the research team and economic think tank at Financial Derivatives Company, live in the studios to take us through the big burning economic issues. And the top story is as big as it can get. Big ticket, 1.5 trillion US dollars. If you're in the news, you know what I'm talking about. Everybody knows on the street.
Everybody's
$1.5 trillion. Yes. We know the name behind that.
Yes, Saudi Aramco.
The biggest oil company and the most valuable company in the world.
In the world, not just oil.
Upstaging
yes.
Apple.
Yes, definitely.
Appling.
It's the biggest company. It's launching its IPO, or they've mentioned that they're about to launch.
The book building has started.
Exactly. You know, the process has started. It's an amazing initiative. It's an example, a positive example for all companies around the world. If you bring it back to Nigeria, looking at where NNPC is
the
and where
the state oil entity. Yes.
Yeah, and look at where Saudi Aramco is. They're moving ahead. They're looking for how to diversify their economy from fossil fuel. They're opening their markets, you know, to international investors, you know, and that's usually a step in the right direction.
Selling shares to international investors,
yes.
listing some locally, and going to pump that money into diversifying from
yes,
oil,
yeah,
taking an early cue.
Yeah, they're looking at, you know, investing in such as solar power and other things that include, you know, looking for ways to actually diversify the economy, you know, use the desert land to generate more income within the economy. And it also, I think the key important thing there is how a state-run economy can be extremely efficient. You know, that's the key takeaway in this, in this.
For Saudi Aramco.
Yes.
State-owned oil corporation.
Yes, exactly. And when you look at it, I know the only setback at the moment is the fact that, you know, the Saudi government claims that the company is valued at about $2 trillion. And it's a weird...
Yeah, that's okay. If I'm the one making the sale, I'm not going to pitch lower.
Yes,
I'm going to pitch higher.
Of
Investors
course.
and analysts and book builders and others, investment bankers say, okay, well, you know, not up to 3 trillion, 2 trillion, maybe 1.5. Okay, let's have the money.
Yeah, but it's a good fight. It's rather than having, you know, fights about, you know, transparency, corporate governance. You know, these are points that they've already checked before moving to this level of, you know, this launch. But at the same time, when you look at Saudi Aramco's move, you know, they're trying to open their market within the domestic stock exchange, and it looks at where, you know, they're headed to in the nearest future.
1 to 2% of 1.5 trillion.
Yeah, according to
That's
Reuters.
a whole billions of dollars.
It is. It is.
You do that here, you're gonna burn Customs Street.
And it'll be interesting to see what
1.2% of NNPC. If you value NNPC with all its assets, and you put 1 or 2% of that on the Nigerian Stock Exchange, I don't know. It's going to be a party. It's going to be a party on Marina. Everybody's going to roll out the drums. Nigerians will be happy to have 1 to 2% of NNPC.
Of course,
I don't mind.
Because it means that, you know, they'll become more transparent.
Yes.
They would have no choice but to, you know, reveal what numbers they do have. You know, we've had back and forths about, you know, what fact they've paid in and, you know, revenues and all of that. It would actually eliminate all of that. So it's something where the government should actually look to Saudi Aramco for it.
It's a big undressing in public to bring a national oil corporation onto the global market space.
Yes, of course.
The level of transparency, disclosure, and what it does to business and investment confidence is unimaginable.
It is.
If you open up an NPC in Nigeria, everybody believes the whole country is exposed because that's the geese still laying our golden egg since even before independence.
Yes, it'll be interesting to see what actually happens within the corporation. But I think going back to Saudi Aramco, it's something where, you know, investors out there would actually be watching in the next few weeks to see what the investors' appetite would be, what the share. They haven't come out to, you know, tell us what the share price would be or how much they would.
The
exactly.
price would be. But I'm sure everybody will want a piece of
Everybody.
Saudi Aramco.
I'll probably think about it myself.
But again, there was this news flash a few days ago, sometime last week, I guess, that the SEC, our own SEC, having some conversations with the NNPC. And I said to myself, could this be a signaling
of
that when SEC start talking to an NPC or vice versa, or two of them in a room, it means something is going on.
It's probably, maybe they're, you know, trying to, you know, take their heads up.
Maybe that unbundling is happening.
Possibly.
Maybe they're taking some advice with the SEC and said, Mary, do you think we can do this? Mary is the acting director general of the SEC. Mary Uduk. I said, can we do this? Maybe we can just have a little bit of it on the market for a go. Then we'll go and have another pie, another one.
Well, you know, with Nigeria, you never get excited about such things, except it's, you know, right
it's
there.
A reality.
Exactly.
But I've never seen that in the news, that NNPC and the SEC never got together for a meeting.
Yeah, but I think that's the positive impact of what, it's positive impact of what Saudi is doing. You know, they're about to show, you know, economies around the world how to actually move forward from this. And it's interesting to also see in the few months what oil prices would be doing. Because, you know, it's just an angle to it in the sense that obviously if you have many investors within the Saudi Aramco IPO, what then would happen to oil prices? Because the valuation would actually depend on their revenue, despite the fact that, you know, Saudi Arabia, they have one of the lowest cost of production. I think
Nigeria is trying to read the tea leaves correctly.
They are.
Saudi Aramco is making a move. I'm sure a number of SOEs around the world will be thinking in that direction, even if not the entire state oil enterprise. Maybe a portion, maybe PPMC, maybe our own MPDC. We unbundle those ones around there, then leave the center of the NNPC itself to stay. But of course, just get a bit of it. Very interesting story. But let's go around. Let's talk about the PMI first. We'll talk about the border closure and how that goes with the domestic commodity prices, where we, as we start November, getting into that season. But let's talk about a PMI reading. Yeah, so the report hasn't come out fully, but we've gotten the hint that it's actually declined to 54 points from 56 points in October, which, you know, from what we see is PMI is a leading indicator. So when you do see that PMI is declining, it suggests that, you know, what then happens to Q4 GDP. We expect that, you know, Q4 GDP wouldn't be as bright as what we do expect. 1.9% in Q2. In Q2. Yeah. We're expecting Q3 numbers in the next couple of days or weeks this month. So that gives us an idea what it does. We won't get Q4 until next year. But at least Q3 will give us an idea of what it is. So let's talk a little bit about the land border issues and how that flows into the local commodity prices. Yes. I like this commodity price check. So far, we've seen that, you know, the border closure has affected mostly the price of rice domestically. It has increased to about 27,500, which is huge per 50 kg bag. And I know I read somewhere where the CBN actually mentioned, you know, they tried to talk to the manufacturers to stop hiking prices above the market, you know, the market price. You know, they're trying to take advantage of this. And all it will do is only steer the economy into higher inflation and not, you know, benefit the individuals within the economy. But rice, poultry, those are some of the commodities that we do have impact on. But at the same time, rice is a staple. We don't expect demand to decline so significantly. And I think people will still buy it, although they will just reduce their portion of it. I'm just trying to find out, do you folks at FDC have an idea of what the resistance level a price level could be for rice? I'm seeing it getting sticky
And
around 23, 24, 25. It doesn't look like it's going to get to 30.
no, I don't think
So it looks like we're getting to that resistance
exactly,
point.
yes. I think between 27, 28, we should see it, you know.
A bit of a resistance.
Exactly, and maybe taper down in the Christmas period
Start coming down.
yes, when, you know, most of these manufacturers would want to sell more of their products. So, yeah, and, you know, stock, you know, take off and all of that. But I think we do expect the prices to only increase to about 27,000, 28,000 naira maximum.
Max.
Yes, because
so
individuals would react.
You think the initial knee-jerk reaction is beginning to peter out?
Yes, I think so. I think so. And it's because, you know, consumers within the economy wouldn't just sit back watching, you know, prices increase.
So folks
to that
are finding
amount.
alternatives
Yes,
to rice.
exactly.
They're eating more local rice. Local producers are saying, look, this is an opportunity. Let me push out. Let me do more. Perhaps employ a few more people.
Yeah.
Get more produce out there. I can make money.
And
because this is a good
you know,
time
we
for it.
have a huge number of Nigerians living below the poverty line. So to them, I think it's not that serious for them to eat, you know, to compare locally produced rice to foreign produced rice. So to them, I think the opportunity cost is more important to them.
Yeah, thank you so much. It's good to have you here.
Thank you so much.
Thank you. Bolanle Agbaje, a member of the economic think tank at Financial Derivatives Company. We'll talk a bit more about the land border closure from an executive point of view when we return.